Hi, this is Bob Iaccino coming to you from the CME Group trading floor in Chicago, talking Canadian dollar futures. Canadian dollar was up over 0.5% on the future side, and up over 0.5% versus the US dollar today. Canadian housing starts came out this morning, and along with a rash of good Canadian data that we had over the last couple of weeks, housing starts reached its highest level in 10 years. The Canadian economy seems to be entering a new gear, seems to be ready to spike and take off. Now, oil prices could end up being part of that. Oil prices moved back above, well above 52 now, into that channel that it was trying to break out of for about 3 months, starting in the middle of December of last year, all the way through mid-February. Finally broke down, and now they're back up. Now, crude oil is one of Canada's largest exports, so that definitely helps the Canadian economy, and with it, Canadian dollar strength. But the Bank of Canada isn't likely to raise rates at their next meeting, which is actually this week, Wednesday. They could raise their growth forecasts, and that'll put them on par to be really the leader economically in this hemisphere, over Mexico, over most of South America, and definitely over the United States, as we've seen a little bit of a slowing. So if you watch crude oil prices, at least in the short term, and we continue to get this particular type of data out of the Canadian economy, you're going to see the Canadian dollar continue to gain strength. 0.5% is not a huge move for the currency. It's been moving sideways over the last 4 or 5 weeks. Looking for a breakout of that is probably a good move, but again, it will depend on the data. Geopolitical tensions, all bets are off in any of the currencies. This is Bob Iaccino talking Canadian dollar futures from the CME Group trading floor in Chicago.